Good morning. Today I will be making a relatively longer video. Not too long, but I'll be covering what I'm expecting this week ahead, which is the second full week of the month of March. We start with the dollar index as we always do, and I know I'm on the monthly chart right now, but I will alternate between different time frames. On the monthly monthly chart, we can see that price is coming off from the monthly CB or fair value gap in the form of a sell side imbalance, buy side inefficiency. So yes, the month has not closed yet, but we can expect this swing high to hold and potentially target the swing lows that we have below this one and this one. I am personally having my eyes set on this, and for those that remember a few weeks ago, I pointed out how this swing low is critical to us right now, especially in this year 2024, because when we go up to the yearly time frame, the 12 months chart, we can see that the swing low is actually this bullish fair value gap right there. So the swing low is actually tapping into this bullish fair value gap, and I believe we'll find the low of the year of the dollar inside of this fair value gap. So just something to keep in mind, something to note, something to watch out for, and we may see a bounce from there. And that's a very high time frame PDRA. So going down to the weekly time frame, I know there's too many purple shades here, but I'll get rid of them in a moment. On the weekly time frame, last week I mentioned the fact that we created a swing high and a swing low as well, but I didn't like the fact that we remained within the range without taking the high or the low. Now this week has passed, NFP has happened, and we have officially taken this low, the swing low right here. So this makes this high to become a quote-unquote protected high. So in other words, I'm expecting bearishness from here. The next thing, now that we've created a swing high after sweeping liquidity, tapping into a high time frame PDRA, what am I expecting? Well, I'm expecting a swing low to be taken, which we got there. The next thing after that is I'm expecting a lower swing high to form, something like this, another swing high to form here. I'm not saying it will form exactly here, but I'm expecting a swing high to form going into the end of the month, because we need 3 candles for a swing high or low to form, and we have, well, 3 weeks left for this month to end. So that's how long it will take for a swing high or swing low to form. But I'm expecting that going into the rest of March and the coming months. Of course, I already mentioned that my main target for the first quarter or first half of this year would be the 99.578. So we'll keep an eye out on that. We also noticed that we have now officially properly inverted this fair value gap in the form of a buy side imbalance. We have closed below it very obviously, very cleanly, and we have now traded into this inversion fair value gap, which we are remaining inside of. So going into next week, I would like to see as a weekly target, I would like to obviously see this sell side swept, and I would like to see if price can close below the inversion fair value gap. So I'd like to see if we can get a closure below and possibly a sweep in this sell side liquidity, this swing low. And I mean, I know it's not a swing low on this time frame, but on a lower time frame it is. So let's go down to the daily chart. On the daily time frame, we can see that price has swept that swing low. This is the one that we were looking at on the weekly chart, which you can delete now, and we've traded into this volume imbalance and liquidity void. The next target that I have in mind is this sell side liquidity here with these relative equal lows and I'll expand on that when we switch to the IPDA Data Range chart. So right now, what am I expecting? I already said I'm looking for a closure below this weekly inversion, and I'm looking to see if we can sweep this sell side, the swing low that's possibly going to form in the week. And how am I expecting us to get there? Well, I'm expecting a retracement into some measure of premium for us to continue lower. Now, something to note while we're here on the daily time frame. We have two daily fair value gap in the form of a sell side imbalance. Let's delete this for now. We have that fair value gap and we have this fair value gap. My issue right now is which one, how do we know which one price is likely going to respect to push lower? Well, I personally cannot say, but I would obviously like to see this swing low that was taken by a fair value gap. But then the problem with that is that we also have this swing low right here, right? Put it out in time, and let's see. Actually, let's just use this tool. I think there's a tool we can use for the price label. So that's the 102.901, and this is the 102.9898. So this low is actually higher than this low, which makes it technically inside of the fair value gap, and I think we can see that when we zoom in even more. It's technically inside of it, but I don't like the fact that we are so close to it. But when we speak in technical wise, it is inside of it. The only reason I prefer this one is because I'm expecting, well, let's just say I'm waiting to see the closure of Monday's candle. I don't know how it's going to close, whether it's going to be higher or lower, but preferably something like this, something that does not take this low but creates a swing low. I'm looking for that swing low because I want to be able to measure from this low to the recent swing high, which is all the way there. And we can see that if we get such a formation, if we get a candle that does not take Friday's low, we will then be able to tell that the only PDRA in the form of a fair value gap that's in premium is this fair value gap, this CB. So it's the higher one and not the lower one. This is exactly why I'm expecting it to come to this fair value gap higher up there than this one. But we would have to wait for Monday's price action to print and play out and do its thing for us to be able to measure the range on a daily time frame. So now that we've already highlighted that, let's move on to the IPDA data range for the dollar index, still on the daily time frame. We can see that so far price only gave a premium on the 1st of March. So if you had missed this sell entry, that was all it gave. You wouldn't have been able to cash the move down that we got last week. And I don't believe there's much else I need to add here, but the fact that yes, we have the 20 days highs, 20 days lows, 40 days highs, 40 days lows, and 60 days highs and lows. We shouldn't forget to measure the halfway point of these ranges. So I'm looking here at from the 40 days high to the 40 days low. Let's actually delete the fib and redo it. So we can see the 40 days high is right there, 40 days low is right there. We can see, using this range as well, the premium section of it is right here. So anything above this portion would be considered premium in order to take it down. Premium of the 40 days dealing range. And the only thing that I see in the far premium of it is this CB as well. Of course, this one is included, but only from this portion of it going up. So my eyes are set on this, but as I said already, we'll see based on how Monday's candle prints out. So I'm still expecting lower prices on the dollar. I'm expecting the 40 days low to be swept eventually, if not this coming week, then the upper week for sure. And I'm expecting us to react from this fair value gap, but this can also be used. Nothing stops it from doing that. So let's move on to the next pair, which is USD Swiss in my case. And we can see sort of a similar formation with USD Swiss with the dollar index. The difference being that the dollar index has already cleared the 20 days low and heading for the 40 days low. But we can see that USD Swiss really struggled to make new lows. In comparison, the dollar would be somewhere here, while USD Swiss is still here. The reason behind us being so behind, the reason behind us being so behind on USD Swiss was because of the liquidity sweep that we had to do on the 1st. So on the 1st of March, we actually swept the 20 days high. We traded in premium for 1, 2, 3, and of course the first day, which is makes it 4 days of trading in premium, which is above the blue line. And price finally displaced lower, sweeping swing lows, as we know. And now we are looking for it to create a lower swing high. So note how price has already swept that swing low, and I believe swept this one as well. So we've swept multiple swing lows. The next thing that we're waiting for with this bearish formula that Deontay teaches is that we expect a lower swing high from this previous swing high. So I'm expecting this area. I'm expecting a lower time frame confirmation to sell USD Swiss within this fair value gap. It might be 100% fill because of the dollar wanting to retrace to the second fair value gap higher. But this is what I'm expecting to see, and the first target that I have is the low that we created on Friday, which is close to the 40 days high. I'm waiting to see if we can tag that. Then of course, going through that, we are looking for the 20 days low because it has relative equal lows with the 31st of January as the 2nd of Feb. So I'm expecting a 20 days low to be hit ultimately by the end of the month. And of course, going through that, we might see the 60 days low as well. If the dollar can remain animated to the downside, targeting that yearly buy-side imbalance that we outlined. Just as a quick comparison, we can see that USDJPY did not sweep the 20 days high. We actually created relative equal highs, and I thought price was going to sweep that for us to take it down, but we can see that we just fell off from there. And looking at USDCAD, we also failed to take out the 20 days high. We actually created, I believe, almost equal highs, not really, but we failed to create to sweep the high. So this makes me think the liquidity sweep has already happened, and my invalidation point therefore on USD Swiss would be the 20 days high. I don't expect price to trade all the way back up to that 20 days high. We can trade up into above the blue line for premium, but not to this price, which is at 0.88861. I'm not expecting price to come up back up there because that's the level that has already been swept, and there's no reason for us to come back there again. So a little bit of SMT divergence between the three currency pairs. Let's move on to AUDUSD. If we are bullish on the foreign currencies or the cross pairs, no, not really cross pairs, but just the measures, and bearish on the dollar, then nothing stops me from also being bullish on AUDUSD. Same thing or similar stuff happened, actually a little bit of a better setup, because on AUDUSD we swept this swing low. We did not sweep the 20 days low, but we swept this swing low going below the equilibrium line into discount and just shot up from there. I was actually expecting us to come back into this on Friday. This was Friday's trading. So when we created this fair value gap, I was expecting NFP to run down all the way back to this fair value gap, because NFP can can be that dramatic, which aligns with a higher time frame order block, I believe. Not sure. Yeah, it aligns with this order block from the weekly. So I wanted to really see if price could come back to it, target, and continue to the upside. But we didn't do that. We just continue pressing higher. So going into next week, there is a chance that we can actually find price tapping this, just barely, not even going to the halfway point, just barely tapping this and pushing higher. But we also have this fair value gap higher right here, this BC, so we might also get price coming to this. And both of these fair value gaps both have swing highs that were broken, so they to me are high probability. And I'm expecting higher prices from one of them. It all depends on how price prints during the week, how weak or how strong the pair is. I'll obviously use the midnight openings and Sunday openings and daily closures to gauge which one would be best used to propel price to the upside. Of course, we also need a swing high to be able to measure our range, which may help us to gauge where price is likely to come into. But obviously, ideally, I would like to see this lower fair value gap to be used as support for higher prices, but it doesn't have to. You can literally just come into this one and use the 20 days high as a previous known array or important IPDA level, as I've already explained in the video where I covered the IPDA data range. So anything can happen on euro dollar, but I'm expecting higher prices and I want the 60 days high to be targeted. Let's see if it's actually clear. Yeah, we just traded into this weekly fair value gap. We didn't close above it, but I'm expecting price to retrace a little bit and continue pushing higher. On the monthly, the same thing. The reason I'm okay, let's hide the illustrations. The reason I'm expecting the 60 days high ultimately is because of this. We have weekly this is monthly actually. We have monthly internal range, internal to external liquidity. In other words, we have this fair value gap here in the form of a buy side imbalance. We dipped into it, got a shift in structure on a lower time frame, in other words the weekly and the daily, and I'm expecting price to go for the next swing high, which is right there, and that swing high is coincidentally the 60 days high over there. So that's why my ultimate target is the 60 days high residing up there. That's all I have on AUDCAD. Let's move on to the next one. I would actually like to look at Euro USD, but let's start off with the pound just to skim over it quickly. I'm not going to be going in depth with this, but you can see GBP USD opened up on the 1st, traded lower on the same day, and since then has just been having bullish closures and continuation to the upside. Right now I can see we have this fair value gap. I know it's in an extreme premium of the range of the whole month, but we have two previous important highs according to the algorithm, the 40 days high and the 20 days high. We have two important highs residing inside of this BC. So we might see a situation where we trade only to this, we trade down to this BC and continue pushing higher without having to come into a discount of the range because of how bullish it is right now, and the fact that we've gotten bullish candles the whole way. I'm expecting bearish candles to form in the earlier portion of the week and continue into the upside. We should also note that we have red folder events on the pound as a currency, so keep in mind of that. Now that we've cleared the IPDA data range highs, the question now may be, what now? Does it mean that we are done with the pound? No, of course not. It just means that we can still hunt other liquidity levels or standard deviation levels. So I'm still keeping an eye out on these levels here, especially the 1.3 level, which is that swing high but rounded up. I'm keeping an eye out on that. That's my next target or draw on liquidity for GBP USD. Now that we've cleared that up, let's move on to euro dollar. On euro, we got the direction correct, but honestly, personally, I never got the entry that I wanted. Got the liquidity sweep last month of clearing those equal lows. We inverted this fair value gap that was a CB, dipped down into it and continued higher. We also came back and traded into this other block, these two down close candles, pulled them out in price, in time, I mean, and you would notice, okay, let's use a rectangular tool. So pulling out these highs in time, you can see price came down to it, used it as support and continued pushing higher in the month of March without giving us the discounted price that we wanted, which I was fine with. And I did say in my previous last week video that we might get a push up from here, but I said if that's the case, then I would look for a swing low, a higher swing low to form, then I'll be buying the next day. We never got that either in the week. Then I also said it's best to buy below the week's opening or below the day's opening. The week opened there, somewhere around there on Sunday, and I was looking to see if price can touch or dip down below it the whole week, and we never got that. We only tapped it on Monday. Let's actually take a look at that real quick. Okay, this is the entire week's price action, and as we can see, the blue line highlights the Sunday opening price right there. And we can see that on Monday at 3 a.m. during London was the only time that we came back down to that opening price, and then gave us a little bit of a discount during New York by dipping below the midnight price. And price just continued playing around these levels, essentially never really came down to the Sunday opening price, and then continued pushing higher from there. So this was last week's price action that led to me not being able to capitalize in the move on euro in any way, but that's fine because we still have next week. Next week we have this fair value gap. I know that I said I wanted an extreme premium on dollar index for me to consider selling it off, but on euro this is the only daily fair value gap that I see. So we might actually get price trading into this. We might of course trade lower, maybe tap the 20 days high, but I don't want to see a closure below the daily BC that we have right here. I know it's a small one, but I'm expecting that to be the low, to act as support for higher prices. Personally, I actually wanted to see if we could not trade into it earlier in the week, as in Monday could open. I would like to see us continue trading higher without taking the low of Friday. I wanted us to trade higher, clear these equal highs at the 40 days high right there, relative equal highs. So I'm expecting us to clear these highs, then maybe somewhere midweek we can come back down to test it and possibly create that higher swing low that I was speaking of. So we have not gotten a swing low since we opened on the first, so I'm expecting the 1.1 level to be tagged because of how close we are to it, and then we can create the swing low probably or hopefully in this fair value gap to continue pushing us higher, because most of the time markets don't tend to keep grinding one direction the whole time. But this is of course what I'm expecting. Nothing is set to stone, so we'll see what the market has to offer, but this is my expectations, and it only comes from experience and reading the charts for as long as I have. Let's move on to the next one, which I believe I've already covered GU, EU, AU. I'm not looking at NU this week. NZD USD, I'm not really paying attention to it, but I will be paying attention to one more exotic pair, which is not really a swing trade. It's more of an intra-week, earlier in the week situation, and I'm not even gonna go on a higher time frame. But right now we can see, based on the trend formula that we just highlighted, we can see that price here basically swept those lows, all these swing lows, and I know it turned around in a choppy manner, but it turned around eventually. Okay, that's fine. What do we look for now? We look for swing highs to be purged, right? And notice how price purged that swing high. Let's do this, use a different color for it. Notice how price purged the swing high there, purged the swing high there, purged the swing high there, and purged the swing high there. In the process of purging these swing highs, what's the next thing we look for? We look for higher swing lows to be formed. And notice how we just created a higher swing low than this main one or this one. So now we are getting protected lows being formed. Higher swing low, and over there higher swing low. And notice how we tried to sweep this low, but we didn't. So we've got a higher swing low here as well, and one that literally rejected quickly back into the range, turning bullish without even closing below this BC. We didn't even bother having a body inside of it. So right now we are bullish. What could we be targeting? I'm looking at this fair value gap. I'm not looking at the liquidity levels, just this massive inefficiency in the market. What's so interesting with this inefficiency to me? Well, it's because of this right here. We got this high, right? The high of this candle, which is where the inefficiency starts. And I decided to see what this high was here as well. And we would notice that we have perfectly equal highs at 1.47802. So in other words, the entry of this fair value gap and the high that we created here are perfectly equal highs. So what do we know based on ICT's teaching about equal highs? The market makers tend to attack or clear them as quick as possible. And yes, I know price went down all the way to this low, but it did not take out the low of the order block that was formed here, which is a combination of order block and fair value gap. We didn't take out that low that formed the order block and the fair value gap. So I'm expecting us to clear these equal highs earlier in the week. In other words, we need a lower time frame entry to engage in this. So let me clear these lines and go down to a 4-hour chart. On a 4-hour chart, we can see, well, the only PDRAs I see right now is this order block, bullish order block, that's residing exactly where the buy side imbalance is, the BC. So keeping an eye out on this bullish order block. But we do have a series of down close candles. So it's not just this last one, we also have this entire thing, which price can trade down into and decide to use that to propel higher. But I'm mainly looking at this one. The reason is because of a lower time frame PDRA, this 1 hour fair value gap. So we have this 1 hour fair value gap right here. I know it's in an extreme discount and with equal highs are literally right here, but I'm saying this because price we already formed a swing high right there on the 1 hour time frame, which is not the lowest time frame I'll go. The lowest time frame I'll go on is the 15 minutes, but right now it's not the cleanest. So let's just pay attention to the 1 hour for now. 1 hour time frame created a swing high. When we measure the low, the last swing low, it's actually right there, and the most recent swing high, which is right there, we can see that the only PDRA residing below the 50% that I see is the BC right here. So I'm expecting this to be the one to push us higher, or at least I'm expecting this to be a discount array that if we get, I would like to take to push us higher. Of course, price may not even come down there because again, look how close we are to the target. We are literally just a few pips away from the target. So let's use this to compare. So comparing where price is right now and pushing up to the target, I believe that's 28 pips. Not sure how these pips then work, but I'm guessing that's 28.9 pips. Compare that distance with this distance of coming all the way down here to where the fair value gap is, it's the same, it's about the same distance, 28.7, and if we trade it below it, it's gonna be about the same, 29 pips if we trade it inside of it. So now the argument becomes, are we going to travel about 30 pips down into this PD array when we could just travel 30 pips up and just clear the drawn liquidity? That's the question. But for me personally, I am not really going to worry too much. I can just execute on market with the stop loss being here. I know it's a negative risk reward, but I do have a video on the channel where I can't say I teach, but I cover the few things about negative risk reward, which is, in summary, it doesn't really matter as long as your risk remains the same percentage wise and you know where the clear drawn liquidity is. So this is what I'm expecting going into next week. Of course, as I said, price can come down into this inefficiency and might make me want to move the stop loss today. So I'm expecting this early on in the week, and I'm not sure what's going to happen from there. So that's all I have for now. But before I go, I just wanted to say thank you for the 69 subscribers. I appreciate it. I'm glad that I'm actually reaching out to more people than I initially intended. The next time I'll be reviewing this, I'm expecting it to be at 420 subscribers. So stay safe, good luck, and good trading.